Hello, welcome. This is Bert Dohmen with Chart Guru. Today we are going to discuss Apple. The chart is starting to look very interesting, especially if you're interested in short selling. Um, uh, as you know, I have been very bearish on Apple since September of last year. On September 21st, Apple had a high of 705, that's historic, and then started declining. And 6 days later, we said that's it for Apple, and it will decline now. First target would be 520, and we did see 520, and that was right here, November 16th. And then we had a rally, and then we had a new low at 420, and that was also our next target was $420. And earlier this year, a few months ago, I said we'll eventually go down to 320 on Apple. So let's see how that is developing. The chart that you see here is a monthly chart. So every bar that you see here, these are bars, is 1 month of trading. And so it has quite a bit of data, goes all the way back down to 2005. Wouldn't it have been nice to have bought it down here, which was well below $100. And we can see here it was a beautiful rally, especially after the low in March of 2009, which was after the financial crisis, the global financial crisis, where everything caved in. And that was the start of a huge up move for Apple. And we got up to 705 here. And this is what everybody and his dog owned. Apple stock was truly over-owned. And the reasons for owning it were not very convincing, such as that they had a lot of cash on their balance sheet. Cash is not a good reason to buy a stock because, in this case, Apple might be earning, let's say, 1% on its cash. And I think when you buy a stock, you want to earn more than just 1%. You like to have a company grow or at least have a good dividend. So we've gone down here. This was the low on China TV in April and also CNBC Asia. I said we would see 3 in front of the price, and we saw that here at $385. And then we had a little rally, and the anemic rally here really shows that there's a huge selling above the stock. After a big decline like this, we should have seen much more of a rally. We should have gone at least over $520, but we didn't. And so now it's on the way down again. The critical level here will be the 385, and which was the low on this bear market. And when that is broken, then of course even the most ardent bulls will give up. You may ask, what are these dotted lines? And these are Fibonacci lines. And what we do is we put the cursor here and here, which is the high, so between the low and the high, and then the computer gives us the percent retracement levels. These are Fibonacci levels, and they're right here. A very important Fibonacci level is the 50% retracement. And you can see that right here at the low 385, it hit the 50% retracement level. That is usually a good first support that causes at least a bounce, and that's what we saw. Now, the next Fibonacci retracement level would be the 61.8. That is an extremely important level, and this comes in here at about $320, and that's why for several months I have said our eventual target is 320 on Apple. And it seems like this is going to be broken here very soon. I would think that at the latest it would be in September, but it should come before that. And then we will see if it can hold 320. So that's Bert Dohmen for Chart Guru signing off right now. If you own Apple, you should at least hedge your positions, I would think. And if you don't own it and you're an experienced trader, you might want to see if you can make money on the short side. But Apple fundamentally is gone. And if you want to hear more about my opinions, go to Forbes.com and see my latest article, which was posted today on June 26th. Thank you very much. I'm wishing you happy trading.